Welcome back to the channel. I'm Foreman. In today's video I'm going to be telling you the UK stocks I'm buying, as well as my thoughts on the Bank of England raising interest rates and commentary on a few companies with updates this week, such as ASOS PLC, Games Workshop and also Future PLC. There are many more to be covered, so let's jump right into it. This week my portfolio has unsurprisingly underperformed yet again. We can see this on the spreadsheet that I've got with my Patreon. If you're interested in that, I'll leave a link in the description down below. But anyway, I'm updating the spreadsheet at the moment. I'm trying to make it look a little bit nicer, a bit more visual, so that you guys can see it a lot more clearer when I talk about it on the week, and then have it on a better layout. At the moment, I've just moved things down so that my camera's out of the way and improved it. My portfolio has underperformed the markets yet again. It is unsurprising, but I am confident over the longer term. My portfolio has dropped by 1.9%, or £341.72. The FTSE 100 has outperformed, gaining 0.7%. The FTSE 250 has dropped by 0.98%. S&P 500 has dropped by 0.69% as of recording, and the Nasdaq 100 has dropped by 2.19%. So in the short term, I've outperformed the Nasdaq, but as I continually say, my overall performance in the last 669 days, I'm down 37.17%, which is obviously a significant amount. And compare that to the Nasdaq that has gained 80.69% in that time, it is staggeringly different, and in no way am I doing very well at all. My portfolio has a cash position of 4.3% as I deposited my monthly deposit with my salary on last week or the week before last, and at the moment that's going to continually fall down. And being disciplined, investing the same amount each week as part of dollar cost averaging. Yes, Boohoo closed 98 pence at the end of this week, and yes, buying more would have been a great time to average down, but I've got to remain disciplined. I don't want to use up all my cash too early, because for all I know, in 2 weeks time Boohoo could be even lower. As I say, there's no logic in the markets at the moment. Everything is trading like cryptocurrency, crap coins, and realistically, things are certainly changing pace. So the Bank of England have risen interest rates to 0.5% in their effort to tame inflation. Previously, it was 0.25%. However, they had only increased that, I believe, a short while ago as well. And it's very likely that this will continue onwards. I believe inflation's figure in the UK at the moment was something like 5.4%. I'm not sure whereabouts it is on this article, but that is a very high amount. They're saying it will remain over 5% by the end of the year. People have been asking me, well, how does inflation impact the stock market? How does it impact UK stocks? What does this mean? What can I do? How can I avoid this? Realistically, we can't avoid this. Inflation is already priced into the stock market. Inflation being this level, and supposedly the Bank of England forecasting it will rise to 7.25% in April, means that UK stocks are going to have this priced into their value. So therefore, if the Bank of England's forecast is wrong, inflation actually seems to subside on its own accord, then realistically you might have a good entry point at the moment. But there's no point trying to trade between sectors at the moment unless you had a very heavy value portfolio and you've seen the beaten up growth stocks and thought, you know what, I'll top trim some of my value stocks and buy some of the beaten up growth stocks so that I am well placed for the longer term future. At least that's what I would do in this sort of situation. But my portfolio at the moment only has growth stocks in it, at least in my ISA, and so in this way it does mean that I'm very limited. My hand is forced. I have a certain amount of cash available, but I'm really not able to weave in and out of this market and take advantage of all of the opportunities that are certainly present at the moment. But obviously inflation isn't a good thing, and raising interest rates isn't a good thing either. Raising interest rates means that money is now less cheap. It looks great for the consumer, which means they might be able to get a higher interest rate on their bank account, but not very good for the risk-free rate of return if inflation rises. The rising interest rate would hope to therefore lower the demand. At the moment, we have an issue with supply and demand. We have a lack of supply but a very high demand. So the hope is with the the raising of these interest rates, it would then lower the demand in line. But in that way, it may be creating a recession. But then how is Foreman, a 22-year-old with 2 years of investing experience, going to know what's going to happen to the global economy? Why is he trying to predict macroeconomics? And realistically, I'm not. I'm just commentating on it and creating my own speculation. Realistically, anything could happen, and I'm very likely wrong in this process, but I do find it very interesting to talk about. I do think interest rates will continue to rise, but there is something to keep in mind. They do have quite a lot of debt debt at the moment. So how much will they raise interest rates? Because surely you would want to let inflation run a little bit longer. And maybe that's why they're not raising it as sharp as one could, to perhaps ease off the amount of debt they have on the balance sheet and let it wither away to inflation somewhat. Again, this is speculation, and ultimately I can't commentate very well on this, but we have certainly seen a rising pound lately. We've seen the pound reach €1 20 cents is equivalent to £1 now, and that's certainly clawing back up, and it may be a trend that will continue over time. This is something I've mentioned before. I didn't want to be exposed to currency exchange rates, and I said this is my reason why I didn't want to invest in US stocks. I had felt that the pound had been beaten up. Again, this is my own speculation. Effectively, it's a gamble here. I didn't really want to invest in US stocks, as one of the reasons was I think we would have had a rising pound in the shorter to medium term, even though over the longer term, I do think the pound will continue to lose value like it has. Anyway, jumping into Sylvania Platinum, they're pleased to announce their results for the end of December. Had mentioned that in quarter two, I believe, they had a group cash balance of $110 million, down from $132.7 million, although I believe this was due to their dividend payment, although I haven't dived deep enough into this. I do prefer the tables, not when it looks like that though. That is beyond me. I want to keep something quick and read it very easily. We have seen their net profit increase, but then I don't know if they're saying, yeah, it's $15.5 million of net profit for the quarter, or if it's actually their overall amount at the moment. I'm guessing it is for the quarter. And we've also seen their group earnings before interest, taxes, depreciation and amortization of $22 million or $22.3 million, which is up from $13.6 million in quarter one, suggesting that their profitability has increased over this time period, although the cash cost per their PGM ounce has decreased to $772 per ounce from $862 per ounce, suggesting that the refinement or the mining of these PGM or platinum group metals has actually become cheaper, as far as I'm aware in my limited knowledge, because I'm not very well researched in mining companies, for instance, meaning that they are therefore overall more profitable at the moment. But then again, they are also impacted by commodity prices, and if PGMs, for instance, do decide to take a nosedive downwards, then obviously they're going to lose a lot of their profitability at the moment. But when they have a group cash balance of over $100 million, they are well positioned to continue. And it is, I suppose, a positive sign to see that they have achieved 16,605 ounces of PGM in quarter two, which is up from quarter one, and that their net revenue is actually also up to $37.9 million from $29.8 million. They've mentioned that there are some challenges. The Western operations have faced continuing challenges due to water shortages at the plant. They were I can't even say that word. I'm not going to try. They were, let's say, pushed onwards to a higher amount by the temporary tailings deposition strategy. And this is where I'm out of my depth here. I'm not going to pretend to understand this. I would need to do more research on this, and this is why I only hold a very small position in my SIP, where I don't really look at these companies as closely, but I think their fundamentals are good. They're companies I've bought and will just leave and let them run for a while, because obviously I'm not going to understand them as clearly as perhaps my two main core holdings in the ISA portfolio, which are Games Workshop and Boohoo. Future PLC has had a trading update. They say they are trading in line with expectations and that they are pleased to reiterate their recently upgraded guidance for the full year. Now, I'm not sure where they have actually added anything else to this, but they have literally said that, yeah, their guidance, they're in line with it. The thing is with Future PLC is you don't know how much of their acquisitions are being integrated into their performance. They are a very acquisition heavy company. They bought Go Compare, they bought Dennis, they bought some American thing that I can't remember the name of. It was a magazine company and it missed something like that. They continually buy things using their cash flow. Their cash flow allows them to make acquisitions, as I've just said, and this allows the company to expand at a rapid rate. However, when you look just at the financials or the financial statements of the company, it becomes very confusing, because they can say, yeah, we're in line with our expectations for the full year results, but then their expectations for the full year results could have been before they'd made acquisitions, and therefore, yes, they have reached their revenue target, but only because they've bought market share elsewhere. Whereas perhaps a more interesting company or a company with more favorability would be one that has that money or that cash flow available, is able to reinvest it back into their own business to therefore create more profits and therefore organically reach these guidance levels that they want to reach. So I suppose in this regard, this trading update doesn't really tell you much. It just says, look, they're in line with expectations, and you'd have to dive deeper into what their expectations are. And for a company like Future PLC, you would need to go through a lot of their previous year's financial statements to really identify the trends of what has been going on inside the company. This is a company that I have actually given a stock analysis on. If you'd like to see that, I'll leave a card at the top right of the video. But effectively here, Future PLC, very complicated business. I think they are quite overvalued. But if you would like, obviously, a stock analysis for yourself, click the link in the description down below. I will not be lying to you, but it is a paid service where I make a public video. We've also got Ashted Group, a former holding of mine. They have certainly seen quite a significant pullback as of late. I think I sold roughly at, actually, you know what? I think I sold, but we'll have a check on the spreadsheet, London AHT. I had 45 shares. I average sold them at £55.43. I average bought at £25.57, and the I don't think it's going to tell me, the share price is now trading at £50 per share. I suppose I could change the daily change, but effectively there I would have lost 10% of my money if I'd bought the average sold price. Even then I would have wiped out even more gains based on where I bought from. So it would have been from perhaps 100% gain. It would have been from 120% gain to a 100% gain. I sold out of this company because they're a great company, don't get me wrong, but I felt that I didn't truly understand the business. This is not something I'm going to have a unique competitive advantage on. Yes, they are leasing equipment in certain different industries, such as agriculture, construction, and other places. But what am I going to know as a person that has not done any agriculture in his life, does not care about a garden, unless it's obviously to raise the value of a property, and really the only construction experience I've had is a little bit of plumbing on a commercial site, which I was not fit for because at the time I was, and I still am, I suppose, very, very skinny, and I could barely even lift up like multi-tools. So what was the point? It just really did not suit my skill set. I digress. Ashted Group has announced that they have announced They've announced their interim dividend of 12.5 US cents per share, which, when using the exchange rate of GBP to USD of 1.34, they therefore are paying 9.3 pence per share. So when we jump onto dividend data, and we can see that this was their interim dividend, we can see that their previous dividend was £7 pence and 15, or 7.15 pence last year. But in the last 2 years, they haven't really grown their dividend. Before that, they had a phenomenal CAGR, even a 10-year CAGR of 30.25%. But this is quite a step up and could be a promising sign for the future, providing they're able to also expand upon their final dividend by quite a significant margin as well. This is a quality company, but this is one I don't understand, therefore I sold. I took a very nice profit on it. It may continue to run up, but I felt because they were guiding, or they are only getting around about single-digit growth, the company was already of a large size, that they weren't necessarily for me and my perhaps more specific investing strategy, where I'm looking for consistent growth that is in double digits over the longer term. Games Workshop has also had director acquisitions. You've got Elaine O'Donnell, which is the chairwoman of Games Workshop, and she's acquired 357 shares at a price of £77.31. I'm just going to effectively say they both bought at £77 each. It just makes a lot more sense then. And also, Elaine O'Donnell's husband has acquired 350 shares at the company at roughly £77 per share. This in total is about 707 shares. When you times that by 77, you're looking at something like £56,000 of shares that they've bought. And now she has an equity in the company of 5,800 shares, representing 0.02% of the company, which is quite a good position. Obviously, this company has grown a lot, and Elaine O'Donnell, I don't know how long she's been with the company. I believe the former chair had stepped down the last year or the year before last, so this is obviously a good move. But then I could also be completely wrong here. I don't really keep up typically with management in particular. But it's a promising sign. The company shares have dropped from about £124 as their yearly high. It might have been a little bit higher than that as well. And now they've come down to £82, I believe, as of the end of this week. And so to see directors buying is a bullish sign, because ultimately, or insiders only buy for one reason: to make money. However, insiders can sell for many reasons, which could be, they need some money to buy a new house, a new car, or they want to, it's going to change, or they might be fearful of what the future may bring. So selling, or insider selling, isn't really a good indicator of anything, but insider buying is a fantastic indicator that they are trying to make money. ASOS has also had some director dealings, and it said that Nick Robertson, a non-executive director, has sold 450,000 ordinary shares in the company. He now holds 2.9 million shares in the company and 2.89% of the total company issued share capital, which is still a substantial stake, although this is quite a large amount to be selling down upon. If you look at the next update, which is still ASOS, right? You look at this, you go, yeah, okay, acquisition or disposal of voting rights, Nicholas Robertson, as mentioned. And it doesn't say position of previous notification. So there wasn't a previous notification for this. And you wouldn't really know that he sold. You would go, yes, 2.89%. This is a new position. Fantastic. But in this case, it's not the case because he had sold 450,000 shares and lost roughly, a third of 0.33% of the voting rights, which I guess, as I say, insiders can sell for any reason. So if you're holding ASOS, this probably isn't an indicator to sell. Ultimately, this is likely just to draw down upon some cash. If there is an upcoming recession for whatever reason, then maybe it's a good idea. Although at the current price, it is quite a low amount to sell at, but then that might also explain why he's still holding 2.89% of the company's shared issued capital. And in the next week, we have got a few updates to come. We've got BP, Ocado, GSK, AstraZeneca, Unilever. There's also Dunelm Group. There is Redrow. There is Barrett Developments. And I believe there was one other that was of interest to me as well. But there are some things that we are going to be looking at. Oh, there, this is a lot better. And it will be interesting to see how these companies do. If you're wondering what stocks I've bought this week, of course it's Boohoo. If I go down to my transactions, my microphone's in the way, so I can't actually see the bottom of the screen. I've bought approximately 243 shares, as it says at the bottom right of the screen, and roughly at a price of £1.03 per share. I'm very much bullish on the company. As I say, I'm continuing to lower my average. Initially, when I had about 2,500 or 3,000 shares, my average price of Boohoo was about it was £2.47, and now it's £1.78. So I'm really clawing down that average and pushing down. At the moment, I have no reason to really be buying any other stocks. Yes, there's some fantastic value in the markets right now, but I think Boohoo is of also a great value. I am trying to be mindful of my overall position sizes and where or less the total allocation of the portfolio is. However, in the short to medium term, I'm happy with an overexposure, as with quotation marks here, to Boohoo. Boohoo are savagely beaten up. The stock is down in my portfolio 45%. It would be foolish for me not to be buying the dip. Yes, you could say, well, it's also foolish. You're not doing risk management. Money management is key. If property is about location, investing is about risk management. But in this situation, I feel that I'm able to. I've looked at the statistics, I've looked at perhaps why the company is valued how it is, and I think that the markets are significantly underpricing the future growth of the business out of fear. Therefore, I'm going to continue to buy. Yes, at the moment, I have a 60.5% allocation to Boohoo, but that is perfectly acceptable for me. I'm happy at a younger age to take upon this much risk because I have a lifetime of earnings in my career ahead of me, and so if I make a large financial loss at the moment, which it is down by 8.8k, this would be a very painful lesson to learn and something that, yes, would stunt my earlier growth, but it's nothing I can't recover from. Instead of being 40 years down the line, being 62 years old, holding a much more substantial stake, let's say £1 million in Boohoo, but I'm down 800,000. That would be a much more difficult amount to recover from, especially at the age of 62, where I'm likely not working anymore, or, for instance, at least if I am, not earning 800k a year and I haven't got time on my side because I've used the majority of it for other meanings. If If you'd like to keep on top of my updates, I have got the Patreon. I do post my portfolio breakdown, all of the stats, like my SIP holdings, like this, and that is available at a very, very low cost, although you'll have to find out for yourself by clicking the link in the description down below. If you're interested in how to make £1,000 a month of dividend income, then click the card at the top right of the video. Thank you for watching. I'm Osborne Foreman. Have a fantastic day.